Greetings, boys and girls. My name is Mr. Simbi, and welcome to our accounting lesson today. Here's a few things that I want you to have. Make sure you have somewhere to write. Make sure you have a calculator, and you also have a pen. And I would also want you to make sure you listen attentively to today's class. Today, I'm going to start a very new topic. And the topic that I'm going to introduce to you today is cost accounting. All right? In cost accounting, we're going to be talking about the production cost statement. Let's look at the things that I want you guys to benefit from today after the end of this class. So by the end of this class, you boys and girls should be able to know your cost concepts, that is, all the concepts that have to do with cost accounting. You should also be able to differentiate between your direct and indirect costs. All right? I'm going to do that with you. Here's one thing that you also need to know by the end of this class. You should be able to differentiate between the types of inventories. All right? We are going to have different types of inventories in cost accounting. You should also be able to see the relationship between ledger accounts and the production cost statement, which we're going to prepare today. And you should definitely be able to prepare a production cost statement. All right? So the production cost statement should be prepared by the end of this particular lesson. Boys and girls, you would know that if you go to a shop which is selling dresses, all right, let's say the name of our shop is Pink Dress Boutique. So what we do is we sell dresses. Now we've decided we are no longer going to buy the dresses from a supplier. In other words, we've been buying these dresses as finished products, and all we've been doing is to bring them to our retail shop, put them on the hanger, then we sell them to our customers. But now we do not want to do only that. We want to be able to make our own dresses now. So in other words, we'll make the dress ourselves, and then we'll then be able to sell it off to our customers in our retail store. So the process of us making this particular dress now is what involves cost accounting. That when we look at the finished dress, we should be able to determine the costs that are incurred in us having the finished dress. So you should now understand that if we are going to make the dress now, we should now incur other expenses which we were not incurring all the time when we were buying a finished dress and putting it on the hanger. That means now we are going to have what is known as a factory. All right? Now, in this factory, this is where we now make the dress, or we manufacture the dress, we produce the dress. How is that done? This is done by converting or processing raw materials. All right? So in the factory, we process or we manufacture products by the conversion of raw materials. So in the factory, which is going to be our first department now, we're going to convert all raw materials to make finished products. But you will understand that you need to have other departments in our business. So we're going to have another department which is also called the administration department. And in this department already you can see from the insert, it has to do now with office work. All right? We're going to touch several expenses which relate to this in the course of today's lesson. So in administration department, it has to do with office duties. All right? So all the office duties are being performed right here in our administration department. Boys and girls, there is the third department now, which has to do with now selling and distribution. So remember, when the dress is manufactured, there is the factory. We also have the administration, and the last and the third department is what we call the selling and distribution department. So this department, it is responsible for advertising. This is simply informing our customers that we now have the pink dresses in the shop. Come and buy. So this department is responsible for advertising, and then the selling and delivery of these finished products. I want you to keep this in mind, that in our business, we now have how many departments? 3. Okay? The first one, we're going to have the factory number one. Number two, we're going to have our administration. And thirdly, we're going to have the selling and distribution. Beautiful. I want us to move on and see now. You would now understand that the new aspect which I'm bringing now has to do with us now manufacturing or producing our dresses. And when this is happening, it's happening in the factory. So I'm going to concentrate now on what we call factory costs. Factory costs, these are costs that are happening or costs that we are incurring in the factory. All right? And in this slide, I've split them into two categories. There is what we call direct costs. Direct cost, and there is also what we call indirect cost or factory overheads. Let me explain firstly what are direct costs. Direct costs, these are costs that you can easily identify in the finished product. In other words, when you look at a finished product, you can easily now identify what has been put in that particular product. That now speaks to your direct costs. So direct costs, these are items or what has been put in the product that you can easily identify. And in this particular case, you have your raw materials. Your raw materials, this has to do now with what we used to produce this finished product. And we also have now what is known as factory wages or salaries as our direct labor. The easiest way to understand direct labor is simply touch labor. This has to be the labor of the people that have their hands on the product. In other words, these are the people that are working directly on the product. So remember, pink dress. These are the people that are now cutting the material, making sure that they measure the material properly and sewing the dress direct. All right? So we have two direct costs. Number one, remember, boys and girls, it is your raw materials or your direct materials. Number two, we have our factory wages. These constitute what we call direct costs. Brilliant. I want us now to come to what we call indirect costs. Already you can tell from the name. These are costs which cannot be easily traced in the unit of production. Indirect costs or factory overheads. And in these you have things such as your indirect labor. This is the labor of the people working in the factory. However, these people are not working directly now with the finished product. In other words, it is not touch labor. And we also have indirect materials. These are materials that we're using in the factory, but not directly on the unit of production. Your factory rent, it is obviously we need to pay rent. And you also have factory maintenance. We need to make sure that our factory is up to standard. Factory insurance, water and electricity, you understand we need to use water as well as electricity in our factory. Boys and girls, you need to understand that we also need to have what is called depreciation. And this depreciation, you should be careful. It should only be depreciation of our factory machinery. Okay? So, in summary, you need to understand this. Two things. We have direct cost and we have indirect costs. All of these, when they are combined, they will make up what we call the production cost statement. All right. Now, I want you to have in your mind now the vision of us making the dress. All right? So if we want a dress which is the finished product, there are things that need to come together. The first thing that we need to have is our raw material stock. Okay? So this has to do now with the material that we have to cut and make our dress. And when this material now is available, it is now issued to production. Issued to production. And who is going to work on this material? You are correct. It is the direct labor which is going to work on this material. So what you see here is material which is issued to production, and the people who are working now directly who now work on these direct raw materials, and remember we call it direct labor. All right, but you remember what I told you earlier on? We do not only have direct costs, we also have costs which are indirect. And these costs which are indirect, these are now our factory overheads. All right? So these are costs that are incurred in the factory, but not direct. Therefore, we have people such as our cleaners, as you see over there. So we're going to have our direct raw materials, and then we have a direct labor. Then we have the people working in the factory, but not direct, such as your cleaners, and we call it factory overheads. When all of this is combined, boys and girls, you need to understand that when we get to the end of the financial period, 28 February, when we now say we are ending the financial period, remember, we are in the process of manufacturing. So there are products which will not be 100% complete. For instance, if we are making a dress, it could just only be the top part of the dress. The bottom part is not yet complete. Therefore, that dress is not a complete dress. We then call that work in progress or work in process. It simply means work still has to continue. All right? So work in progress or work in process, this is units which we are producing but are not yet completely finished. So remember now, we have said direct raw materials, direct labor, factory overheads. Then we now remember we had work in process right at the beginning. So we're going to come and add our work in process at the beginning, then we subtract work in process at the end. When all this is done, boys and girls, we will now have our beautiful finished dress. We call it now a finished product. All right? Then when we have a finished product, what then do we do with the finished product? It is obvious now. We now need to sell it. So selling and distribution, as well as administration costs, they can only be incurred when we have the finished product. Let me repeat that point again. Your selling and distribution and administration costs can only be incurred when we have a finished product. In other words, your selling and distribution can never form part of the production process. Selling and distribution and administration do not form part of your production costs. All right. Once you've understood that, I now want you to understand the different types of inventory. All right? So we have these 4 different types of inventory, and I'm going to take you through each and every one of them. Firstly, we have what we call finished goods stock. All right? Remember, we are making pink dresses. So our finished goods stock, it is now the products that are completely finished, 100% complete. It's a dress that you can sell to your customers. So finished goods has to do with products that are completely finished. That is inventory type number 1. Inventory type number 1, it is your finished goods stock. Brilliant. Let's go to the second type. The second type is your indirect materials. Indirect materials or consumable stores stock. This indirect material, it is stock that is used in the factory, remember like what I said, but not directly on the finished product. So in this particular example, I've given you cleaning material. All right? So your consumable store stock, this is indirect material stock that has been used and is available for use. So we are talking about your cleaning materials. Let me come to my raw material stock. You understand that when we are making dresses, we need the stock of raw materials. So if we need the stock of raw materials, that stock is also counted now as the third one. So our raw material stock, it is the unprocessed material used to produce finished goods. All right? And I have a different example here, which relates to cakes, all right? So if you are making cakes, therefore your flour will be your raw material stock. But remember, we are dealing with our dresses. So our material, which we saw in the previous slide, has now to do with our raw material stock. Lastly, boys and girls, I have the fourth one now, the fourth type of stock. And the fourth type of stock is what we call the work in process stock. All right? Work in process stock. As I had said earlier on, these are products that have not yet been completely turned into finished goods and are still in the manufacturing process. We're still working on them. Or we can say these are goods that are partially complete. All right, these are goods that are partially complete. So once you understand now your 4 different types of inventory, it becomes easy for you with answering a particular exam question. All right, boys and girls, you now need to understand, what is this production cost statement? How do we get the cost of us producing units? Very easy. Let me take you through it. Already in your mind, you still remember. What do you remember? Direct material cost. So you're going to say your direct material cost, which is this one. And you are going to add now your direct labor cost. You're adding these two. All right? So these two, you've added them. You've combined them. And when you add, listen carefully, boys and girls, when you add your direct material cost plus your direct labor cost, it gives you something now which we call prime cost. Yes, when you add direct material cost plus direct labor cost, it gives you prime cost, which is that one, prime cost. Now, to your prime cost, you're going to add something as well. What are you going to add to your prime cost? You guys are correct. You're going to add what is now known as factory overhead cost. You remember, we did speak about it previously. Yes, so you're going to add your factory overhead cost to your prime cost. And then you now have what is known as total manufacturing cost. So here is your total manufacturing cost. All right? Repeat it again. When you say prime cost plus factory overhead, it gives you total manufacturing cost. Now, when you have the total manufacturing cost, you now come to your work in process at the beginning, not beginning. You come to your work in process at the beginning, and then you add it as well. So when you've added it, you now have a new amount here. All right? Then you now say work in process at the end. You subtract it. Remember this, very important, boys and girls. Your work in process at the end must always be subtracted. Then at the end of the day, you get yourself what is known as the cost of production of finished goods, which is at the bottom. Okay? Once you've understood this one now, I want to help you to relate what we did in grade 11 to what we are talking about here now. There is work that we did in grade 11. Yes, we did ledger accounts, the T accounts. So I want to help you to relate this, or to see the relationship rather, which is on these accounts. In grade 11, we did what we call the raw material stock account, and we did the direct labor cost account. Boys and girls, please, I want you to understand that all the figures that I'm using here are what we call assumed figures, all right? It simply means I made them up, okay? So what we're going to do is we're going to start off with our raw material stock account. Let's go. You understand it's a stock account, so it increases on the debit. So here is your plus, and here is going to be your minus. So you start off with your stock at the beginning, which is your 1,000, and you purchased stock now, cash, 2,000, and you purchased also on credit, 3,000. All right? Now, you need to take note that there was some stock which was returned back to the supplier. Hence, you have your creditors control, and it is your allowances. All right? Now, once you have that, you now have your closing stock, which is 1.5. And when you close off your ledger account, you will close it off, remember, the side with the highest amount. You add everything here, you get 6,000. 6,000, you get the difference. Then you get an amount which we close off to the work in process account. Work in process account. And that is 4,000. Now, this is what you did in grade 11. Let me relate it to what is on hand. With the production cost statement, when you have done this 4,000 now, yes, that 4,000 becomes what we call now the direct material cost, which will bring, over here, the 4,000 direct material cost. Now, you understand, we still have another direct cost. Which one is it? Very correct. It is your direct labor cost. So we also open what we call the direct labor cost account. So you remember, we either pay wages or we pay salaries. In this particular case, we're going to use our wages. Okay? So here we have wages, and we've paid wages of 7,700. Boys and girls, remember, you also have what we call contributions. Okay? So remember, we are going to add both of them together. All right? And then once we have added them together, we're going to have now to close it off to the work in process account. So the 8.5 that we'll be having here is now what is taken to the work in process account. In this particular case, boys and girls, we take this where? Very correct. We take it to our production cost statement, to our direct labor cost. So we have our 8.5, which was here. It then appears here. You still remember, boys and girls, what I told you earlier on? When you have direct material plus direct labor, when we add them, what do they form? Correct. They form what is known as prime cost, which is now your 4,000 plus your 8.5 gives you 12.5. Boys and girls, let's go on and see what then happens when we have factory overheads. Remember, I told you, factory overheads, these are costs that are happening in the factory, but not direct. Okay? The first one that we have, it's consumable stores. We spoke about this already. Yes. Now, we also have your indirect labor. You have your water and electricity, rent expense, as well as our depreciation. These are all costs that are happening in the factory, but not direct. Now, we're going to add all of them, and they add up to 3,500. So we then close off our factory overhead account to the work in process, and the amount is 3,500. When that happens, remember, we are continuing now with our production cost statement. After we have prime cost, we then come and then we say plus factory overheads. So we're now going to say 12.5 plus 3.5 to give us 16,000 over here. All right? Correct. Already in your mind, you know which one are we left with now. You're correct. The work in process stock. So we now open what is called a work in process stock account. In this work in process stock account, this is where we have our work in process stock. Remember, it's already saying stock. So if it's a stock account, it means on the debit, it's going to increase. On the credit, it's going to decrease. Awesome. Then you're going to start off with your opening balance, 1.5. After your opening balance of 1.5, you are now going to bring the amounts from your raw materials. What else? You're correct. Direct labor. And then thirdly, factory overhead. So you are adding all of this. You're adding all of this. All right? And then now you know, as I said earlier on, you will have work in process at the end of the year. So we are going to come now to our work in process at the end of the year, this particular year, and it's 4.5. So we close off a ledger account, side with the highest amount. 1.5 plus 4 plus 8.5 plus 3.5 gives you 17,500. 17,500 also comes here. Then 17.5 minus 4.5. Then we find our finished goods is 13,000 there. But how would we show this if it were to come in the production cost statement? This is how you would show it. You would come now, remember, from the prime cost, you added your factory overheads, and you remember we now have total manufacturing cost here. Total manufacturing cost, which was 16,000. Then we now say, always remember, to your total manufacturing cost, you add your work in process. So we added our work in process at the beginning, and which is 1.5 to give us how much now? 17.5. Very, very correct. Now, when we've added it, it gives us 17.5. But we know we still have some work in process. All right? Then how much is our work in process at the end of the year? You remember it here. 4.5. And our work in process must always be subtracted. So it means it must always be in brackets. So you subtract 4.5 and then you have the cost of production of finished goods with an amount of 13,000. All right. I know right now in your minds you're thinking, can I see this now on one form? Okay? Here is how it will appear now when it's all complete. Your production cost statement starts with your direct materials, direct labor, and you add them, you get prime cost. And then you bring your factory overheads, you get total manufacturing cost. And then you add your work in process at the beginning, and then you have 17.5. You then come and you subtract your work in process at the end. Boys and girls, you have the cost of production of your finished goods. All right. When you have understood the format now, I know you're wondering, when are we going to do a question together with Mr. Simbi? Now, grab your calculator, make sure it's close to you. What are the demands of this question? This is something that you need to be very careful of. You need to understand what are the demands of a particular question before you engage that particular question. In this question, we are going to answer 3.2.1, and they want us to do the factory overhead cost note, all right, and for 14 marks. The second thing that they want us to do is to complete the production cost statement. And they say for the year ended 28 February 2017. Very important that we keep dates in mind. Boys and girls, let's get moving. All right. Now, so already in your mind, you should know. I should now have what? My production cost statement here. All right? I should have it here already. So you're going to come in, then you're going to say, here is my production cost statement. All right? Boys and girls, this is what I want you to do. Before you even put the figures now, I want you to be able now to recall the formula. All right? What did we start with? Yes, we started with direct costs. And the first one is going to be your direct material. All right? So you're going to have direct material cost. And we had another one. You're very correct. We also had what we call direct labor. All right? Direct labor cost. And if you remember, we added these ones. We would add them. And when we would add them, what would we have?
boys and girls, you're correct, would have now what we call prime cost. Would have prime cost. And I taught you that when you have prime cost, you must now come and add something. What do you add? You add factory overheads. Correct. Factory overheads. So you're going to bring now your factory overheads here. And here's the two last parts now, which I taught you. And you understand completely that when you have added your factory overheads, you must then have, which one? Yes, work in process. All right? All right? But before you get to work in process, what do you have now? All right? You're going to have what we call total. You're going to have your total manufacturing costs. And then definitely now you come, then you say, I always want you to say, plus work in process, where? At the beginning. And then you say, minus your work in process at the end. Okay, and your work in process at the end, remember, it must always be in brackets. And once you have done this, what did I teach you? It will give you what we call what? Total cost of production of what now? Production of what we call finished goods. All right. So you need to know this. It will help you a great deal. Now, I want us to go to our information now. Let's look at our information. Our information, it starts with in the year 2016 and in the year 2017. We have a work in process, and we also have indirect factory materials. Okay, brilliant. Let's start with the first thing that we are given. What are we given as the first thing? Work in process. Already you have your format, so you know where to put it. Yes, you know where to put it. So what are you going to put first? The 2016. The 2016 is the what? The work in process at the beginning. Don't say beginning, beginning. So it's going to be how much? 70,000. So it's your work in process at the beginning, 70. You can bring it here already. You can bring it here. All right? It's easy. It's easy. It's already given. And your work in process at the end, how much is it, boys and girls? 94,000. So you come in here, you're now saying, my work in process at the end is 94. 94. All right. This is simple. So that means I've already dealt with this particular information. I know where it has to go. Boys and girls, they also gave us another stock figure, which is your indirect factory materials. But I have taught you already that your indirect materials do not come into the production cost statement, but rather where do they go? They go exactly to your factory overhead cost. So that means you come to your factory overhead cost. What is that? That is your indirect materials. So you're going to come and say indirect materials. Indirect materials. And I want you to open a bracket. And you know you're going to say opening stock, which is your 5,950, and you're going to say plus your purchases. But in this particular case, we have not been given purchases, all right? We haven't been given purchases, so we know here we're going to get purchases here, all right? But in any case, we know we have been given closing stock. And closing stock, how much is our closing stock? It's 8,750. So I'm going to come already and say minus 8,750. Okay. And then I wait now for the information which is to come later. Nice one. So that means I've already dealt with my indirect material amounts here. So that, boys and girls, has been dealt with. Let's go to information B. And information B now says, raw materials issued for production. This, therefore, becomes very easy for me because I know if raw materials have been issued for production, where do they go? They go to the production cost statement. Where do I look for them? Under my direct cost. And what is this? Direct material cost. And how much has been issued? It's 2,743,000. 2,743,000. 2,743,000. Brilliant. The next thing, so that means I've already dealt with that one. All right? Let's go to the next one now. What do they say? They say indirect materials purchased. Oh, you remember we did touch some indirect materials earlier on? Yes, we did touch it. And where did we touch it? You're correct. In the factory overhead. Let's go to our factory overhead. So we are now saying we had our opening stock, we had our closing stock. What were we missing? Purchases. So we're going to bring our purchases, and they told us how much is it? 36. So I'm coming here to say plus 36,000. Make sure you have your calculator. You are now saying 5,950 plus 36,000 plus 36,000 minus 8,750. Boys and girls, how much do you get? You end up with 33,200. 33,200. Very, very simple. All right, so I'm now in my factory overhead cost, and what did I say? Opening stock plus purchases minus closing stock gives me my indirect material cost. Boys and girls, come with me to the next item that I have. Here they say salaries and wages. But this is not so clear because you know you have people who are working, number one, directly, and if people are working indirectly. So here they never specify to us. But probably they should have said something. Let's go and look at more information. Oh yes, they did say something. Information C. What did they say on information C? They said 45% of salaries and wages are paid to employees who work directly. Okay, here's the keyword, directly. So directly, it is the touch labor, the people who are working directly on the product. And then they say, and 10%. So 45% is for those who are working directly, and 10% must be allocated as the salary of the foreman. All right, so that simply means, where do we go? This is direct, and our direct, where do we find our direct? In the production cost statement. You're very correct. That simply means we are now going to come here. What do we now say? We will now say, how much was the salaries? How much was the total salaries? The total salaries was 2.9 million. So you open a bracket here now. 2.9 million multiplied. What percentage of this 2.9 is the direct? 45. So multiplied by 45 over 100. Make sure you have your calculator. 2.9 multiplied by 45%. That will give you 1 million. 1,305,000. 1,305,000. All right? And before you forget, you know if you say direct material plus direct labor, it will give you what? What does it give you? Very correct. It gives you prime cost. So you're going to add these two figures now. You're going to say 2,743,000 plus 1,305,000. 2,743,000 plus 1,305,000. It will give you 2 million, punch it again, 2,743,000 plus 1,305,000. It will give you 4 million. It will give you 4 million and 48,000. 4 million and 48,000. It will give you 4 million and 48,000. What did we say? We said 2,743,000 plus 1,305,000, and it will give us what we call prime cost. Remember, we still have not finished with the 10%. Where do we take the 10%, boys and girls? You're very correct. To our indirect labor cost. So we're coming here now, we're going to say now, what is this? This is our salaries, okay? And we're now going to say, how much was that? It is 2.9 million. What percentage are we bringing here? 10%. 10%. So it's going to be your 2.9 million multiplied by 10%. Boys and girls, you will have on your calculator 290,000. All right. I will repeat what I've just said. We have salaries and wages, which are given, and our salaries and wages are 2.9 million. But the information tells us when we go further that this 2.9 is supposed to be split. It says 45% goes to your direct. So where do we take it? We took it to our production cost statement. And then it says 10% is for the foreman. So that means we take it now to our factory overhead as the 290,000. Boys and girls, let us continue. The next information has to do now with rent expense. All right? And it says rent expense is 291,000. So I'm going to do my calculation here so that you don't lose it. So I'm going to come here and I'm going to say now, where is rent going in the first place? Does rent go into the production cost statement or in the factory overhead? Correct. It goes into your factory overhead. So I'm coming here to say rent expense. Now, and I'm going to open my bracket. How much is it? 291,000. 291,000. Let's see if they said something further. Information D, they did say something. They say rent expense must be distributed according to floor space used. What is this floor space that is used? If you are talking about floor space used, it simply means this is our entire building, the floor area. And then this entire building is not only being occupied by the factory, but it has the factory, the selling and distribution, and the admin. And in this particular question, they are saying about 2.4 square meters, 2.4 square meters goes to the factory. And the remainder, which is 600 square meters, goes where? To the administration, to the selling and distribution and the admin. So it goes to the selling and distribution plus admin. Now, it simply means the total of my floor area is going to be 2.4 plus 600. So this whole building is total floor area is how much? Yes, 3,000 3,000 square meters. Then the question is, what part of this 3,000 is the factory occupying? The factory is occupying 2,400. That means if I'm to calculate, I'm now coming here to say, of my rent expense, which is 291,000, I'm now going to say multiplied by, how much is the factory occupying? 2.4. And what is the total floor area? 3,000. So have your calculator now. You're now going to say 291,000 multiplied by 2.4 divided by 3,000. And it will give you 232,000. 232,800. This becomes the rent for the factory. That becomes the rent for the factory. Thank you. Let's go to the next information, boys and girls. Listen to what it's saying. Here's what it says. It says, so remember we've dealt with the rent. What is the next one now? Insurance. All right? It says insurance. How much is the insurance? 49,200. Then I ask myself, where does insurance go? Can insurance go into the production cost statement? Definitely not. Where does it go, boys and girls? It comes right into my factory overhead. So here I'm going to have my insurance. And I am going to open a bracket again. All right? I'm going to open a bracket again. And how much is it? It's 49,200. 49,200. But did they say anything further? Did they say something? Here, information E. The insurance premium has been paid up to 31 May. That simply means insurance, boys and girls, has been paid in advance. So, remember, our financial period is ending in what? In February. That means it began in March. This is how many months? 12 months. But they're telling us that the insurance premium has been paid until May. So we're going to now say from February to May. How many months is that? You need to use your fingers. You say March, April, May. That gives you 3 months. So the insurance premium has been paid for how many months now? It's been paid for 12 plus 3. That gives you how many months? 15 months. All right? So whatever premium we've paid it for 15 months. But you understand we cannot pay it for 15 months. We only need 12 months. That means we need to subtract the 3 months. But it's easy for you to get that one. What do you say? You simply say, how much was your insurance? Your insurance, boys and girls, was 49,200. You divide it by what? 15. Simple. You say 49.2 divided by 15. Insurance per month was 3,280. How many months did we pay in advance? 3. Minus, multiplied by 3. You multiply by 3. Not minus, but you multiply by 3. So, per month insurance is 3,280 multiplied by 3. How much did we pay in total for those 3 months in advance? We paid 9,840. That is what we paid in advance. So it means when we come here, we're saying insurance here, it's too much. There is an amount which has been paid for the next financial period. We must subtract it. How much do we subtract? 9,840. Okay. Now, let's hear what they say. They then say, when you have subtracted that amount, you need to understand that this amount now needs to be shared between the factory, the selling and distribution, and the admin. All right. So it simply means after we have done this, we should get an amount here. All right. So you now say 49.2 minus 9,840. You will get 39,360. 39,360. Now, that 39,360, they said it must be shared between the factory. So whatever they start with, factory, that is number 1. Selling and distribution, number 2. Administration, number 3. When you come here, you allocate accordingly now. Which one was number 1? Factory. So that becomes your number 1 or so. Which one was number 2? Selling and distribution. That becomes number 2 or so. Number 3, administration. All right? So then you know which one goes to which department. But it is easy now. You can simply add 4 plus 4 plus 2. It gives you 10. That means when we are allocating this 39,360, it must be allocated into 10 pieces. But of those 10 pieces, the factory is getting 4. Simple. It simply means you now say 39,360 multiplied by 4 over 10 now. 4 over 10. So you now say 39,360 multiplied by, 4 over 10. And it will give you 15,744. Okay? Punch it again. You say 39,360, all right, multiplied by 4 over 10. And it will give you definitely 15,000. It will give you 15,744. That is on the insurance. The last adjustment that we have, let's see. What are they saying on the list of information? Oh, they said telephone allocated to the administration. But remember here, we don't want administration because we're in the factory overhead. But here they say telephone allocated to the admin is 28,800. So, in other words, we're going to have telephone here. Telephone. And what they've given us is 28.8. And they have said that this 28.8 is an amount which has to go to the administration. Listen to what they say. This telephone amount is allocated to the administration. Now, let's see if they have further information. Remember, we have 3 departments. We have the factory, selling and distribution. We have the admin. They say 20% of the telephone must be allocated to the factory. So this must get 20%. And they say the remaining should be shared equally. The remaining should be shared equally between the selling and distribution and the administration. So if we have 20%, that means these remaining 2 departments, whatever they share, when we add plus the 20, it must give us 100 here. Meaning 100 minus 20. That means selling and distribution is going to get 100 minus 20 gives you 80. And they're sharing it what? Equally. That means this department is going to get 40. That is going to get 40. All right? 20, 40, 40. And then, they then tell us that the amount that they gave us, do you remember the amount again? Yes, 28.8. That 28.8 is for the admin. So, for the admin, it is 28.8. The question then is, how much is going to the factory? Okay? We're going to apply the up method. What does the up method say? The up method says, here's what the up method says. The up method says what you want, you put it up over what you have times what you have. It will give you what you want, okay? Remember our up method? Our up method says what we want, we put it up, all right? Our up method says what we want, we put it up. What we want over what we have times what we have will give us what we want. So let's go. Already we know this is what we want, and this is what we have. This is what we want, and this is what we have. So let us go now to our question. And we're going to say, telephone, what do we want? We want what percentage? 20. And what did we have? 40. So it's going to be 28.8 multiplied by 20 over 40. All right? 20 over 40. And the amount is going to become 14,000. The amount becomes 14,400. 14,400. The amount is 14,400. 14,400. All right? I removed that other part also, which was 39,360 multiplied by 4 over 10. And you remember it was 15,744. Here it was 15,744. 15,744. 14,400. Okay? 14,400. All right. Let's go now to the last part. And the last part is saying sundry factory expenses. So you're going to come now to your sundry expenses. And your sundry expenses, they gave us 189,856. 189,856. Did they give us any adjustments? Let's go and see. No. So that means we can now add everything. All right? Make sure you have your calculator ready. Make sure you have your calculator ready. All right? Make sure you have your calculator ready. If you had left it somewhere, make sure you go get it. We want to add everything now. We want to add everything. All right? Let's go. We're now going to say 33,200 plus 290,000 which is our salaries, and then we add our rent expense as well. Then we come and we add our insurance, which is 15,000, 744,000. Then we say plus 14,400, which is for telephone. Then we're going to add 189,856. And it will give you a total of 776,000. All right? So we added all these ones. We added all these ones. All right? We added all these ones, and we have a total of 776,000. Now, I want us to continue. When we have this now, when we have this, where do we take it? Definitely, we will take it to our production cost statement. We'll take it to our production cost statement. Let's come now to our production cost statement. Remember, this one was erased. It was 232,800 here. All right. And then, remember, we're coming now back to our production cost statement. What was missing in our production cost statement, boys and girls? It was our factory overheads. Now, where do we get factory overheads? Here. How much is it? Our factory overheads? 776. All right? Our factory overheads is 776. So we're going to come here, and then we're going to say our factory overheads is 776,000. And then we're going to add it now. Have your calculator? 748,000 plus 776,000. It will give you, how much does it give you? 4,824,000. 4,824,000. Then you're going to add, what do you add? Your work in process, where? At the beginning, plus 70,000. And it will now give you, how much does it give you? It gives you 4,894,000. 4,894,000. Then you subtract your 94,000. And then you end up with the total cost of production of finished goods being 4,800,000. 4,800,000. And if we come to the question paper, they at times give you this, and they say the business produced 40,000 heads, and it is at 120 per unit. So you could have got this by saying, how much did the business produce? Yeah. How many? 40,000. 40,000. And what was the cost per unit? 120. Multiply by 120. And it would have given you straight the 4.8 million. All right. Now, when you have done with this now, your production cost statement is finished. All right. And if you want to check with what you were doing, here's the solution to what we're doing. You remember our factory overhead? Yes, 776,000. And let us now go and check our production cost statement. Yes, our total cost of production of finished goods is 4.8 million. Boys and girls, it is very important that you use Mind the Gap and study from pages 60 to page 64. But in my conclusion, before I let you guys off, you need to remember you have different type of costs. You have your direct and you have your indirect cost. And your direct cost, where does it go? Into the production cost statement, right on top. What does it form? Prime cost. And your indirect costs, where do they go? Factory overhead cost note, all right? And it still goes on to your production cost statement, but as factory overheads. Boys and girls, it has been lovely having you in my class today. Hope to see you again soon. Please continue to study and take care. Goodbye.